Let's talk about how your Social Security benefit is calculated. Your full Social Security benefit amount at your full retirement age is referred to as your primary insurance amount, or PIA. We have a video that goes over 4 definitions that you need to know to understand Social Security, and those are 2 of them, PIA and your full retirement age. If you set up a My Social Security account at ssa.gov, you can see your estimated PIA on a nifty graph that will show your benefit amounts if you take Social Security at age 62 versus your full retirement age versus at age 70. You can set up a My Social Security account at any time. I set mine up a couple of years ago, so in this case, age is just a number. Your PIA has a relatively complex formula, so we're going to go over a high-level calculation today, and it all revolves around FICA taxes. There's a 3rd definition in our video on definitions. If you are getting a paycheck, there's usually a line item on there with FICA taxes. FICA is an acronym for Federal Insurance Contribution Act. It's kind of like the federal government saying, we're going to have you pay into something, and then we're going to give you something later. That's why they call it insurance, kind of like a premium, but also not really insurance. FICA tax is made up of 2 different parts, Social Security and Medicare. You are typically contributing a percentage of your income to each of those programs. Social Security is 6.2%, Medicare is 1.45%. Now, your employer is also paying FICA taxes on your behalf, so it's really 12.4% for you in Social Security and 2.9% for Medicare. So we're at like 15.3% all in, and this is on top of federal taxes and state taxes. So when you get your take-home check and you're like, why is this much less than my gross income? Well, part of it is because of the FICA tax. Most people are paying 7.65% of their gross pay to FICA tax. And self-employed people are seeing that full amount of 15.3% going to FICA tax. So that's where they can really feel the pain. Okay, those FICA dollars come in, they hit the Social Security Trust Fund, and then Social Security pays those out to those who are currently taking benefits. That's where it gets a little bit confusing, and we've covered this in other videos. Some people think that their money is going into a bank account for them in the future. That is not the case. The money is going into one big bank account or a big fund, and then that fund is used to pay out current beneficiaries. So my FICA tax dollars go into this fund, and they are used to pay out my parents' current benefits as an example. So let's talk about how they, the government, determine how much they will pay you. This is important to understand so you can determine what strategies that you would like to do today that'll impact your number in the future. You can tell already that this conversation is slanted towards people who are still actively working. For those of you who are not working, this will still be helpful for you to understand what's going on with your Social Security benefits. To get your PIA, your primary insurance amount, they take your top 35 years of income. But to qualify, you need 10 years of income taxable through the FICA taxes that we've been talking about. The Social Security Administration actually uses quarters, and this will say 40 quarters. It's not 40 years, it's 40 quarters of a year. So if you've worked for 10 years and you've paid FICA taxes for 10 years, you qualify for Social Security benefits. And they don't have to be consecutive quarters. It doesn't have to be exactly 10 years in a row. For people who maybe stay at home and they raise children and then go back to work, this is okay. It is not 10 consecutive years or 40 consecutive quarters. For some, they work more than the 35 years, and they do have 40 years worth of numbers. That's 160 quarters paying into Social Security. The government will take your top 35 years and use that to calculate your benefit. If you have fewer than 35 years, then some of those top 35 years are going to be zeros. This means that somebody who barely qualifies with just 10 years of qualifying work history will have 25 years of zero in that calculation. Also, this calculation starts as early as you start working. We've had people ask us, do you have to be an adult? Do you have to be 21? It starts counting as soon as you start paying FICA taxes. All right, another interesting note here that a lot of people don't realize is that the government runs an inflation calculator or a multiplier for earlier years. In fact, an example that we saw recently happened where someone's actual earnings in 1980 were $623. Well, that gets multiplied by 4.7 for her. So today, the 1980 earnings are counted as $2,900. It's like she made $2,900 in today's dollars, even though she only made $600 in 1980's dollars. In 1985, she made $8,000 and she gets to claim $28,000 based on the multiplier. So they're going to normalize all of your income for inflation, and then they do a comparison of the top 35 years. They take those top 35 years and then they average that out and figure out your average monthly earnings. And then this is where we need to introduce a new concept called Ben points. This can get a little bit confusing, but I'm going to go through it all and we can chat in the comments, or you can send me a message if you have questions. There are 3 categories of that income. So let's say that somebody has $4,000 of average earnings over that 35 years. They adjust for inflation, they divide it by a monthly amount. It comes out magically to $4,000 because we want easy. We love easy math. Everything moving forward, by the way, will be 2023 numbers. These numbers do change pretty much every year. Okay, on that $4,000, they will take the first $1,115 and they will multiply that by 90%. So for the first $1,115 of the $4,000, you're getting 90% of that back in a Social Security benefit in the future. Then from $1,115 up to $6,721, you're getting 32%. So think about that for a second. If we draw a line that represents your Social Security benefits compared to your income, there is this really steep hill for the first $1,115. You're getting a lot of benefit for every dollar of earnings. It's 90%. And then all of a sudden you hit this mark at $1,115 and it flattens out quite dramatically. That's the bend point. It flattens out because you're only getting 32% of the next dollar, and it continues until the next bend point, which is $6,721. Over $6,721, it goes from 32% down to 15%. So you have a few of these bend points along this chart. And the reason that that's important is, imagine that you're a self-employed individual and you have the ability to choose how much income or how much money that you make. Well, it doesn't make a whole lot of sense to pay 15.3% in FICA taxes in order to hopefully get this little incremental benefit. Let's say that you have $120,000 of income and you could choose to pay yourself another $20,000 or not. Let's say that you do decide to pay yourself an extra $20,000. Well, you have to pay FICA taxes, both sides, the employer and the self amounts for that extra $20,000. It's a bunch of taxes. And then you're going to throw that number into a big average and only get a tiny piece of that back, meaning a 15% piece of a lower average back while paying 15.3% in taxes. It doesn't make the most sense. Now flip that around. Let's say that you're paying yourself $500 a month. You could pay yourself another $500 and get 90% of that back in Social Security benefits. So you can see that there is a strategy here. You want to pay yourself a little bit, but you don't want to pay yourself so much that you're in those other bend points. This point is actually helpful for people who maybe feel like they didn't earn a lot throughout their life. You get the most bang for your buck with the lower income that you had. So another friend or a spouse who maybe had a lot higher of an income, even if they earned triple what you did, their Social Security benefit wouldn't necessarily be triple your number. Let's go back to if you have zeros in the mix, years where you weren't earning income or paying FICA taxes. That changes things a bit as well. A zero in there is bringing down the average by a lot. So if you worked a little bit more, it'll have more benefits for you. But if you've been working your entire career, the one extra year of working may not change your average that much, so it might not be worth it. After you earn $160,200 in income, you are no longer paying that FICA tax, and specifically the Social Security side of that tax. And that's again for the 2023 tax year. This number does change most years, so if you are watching this video in the future, outside of 2023, that number will likely look different. Over $160,200 in income, you still have to pay Medicare tax. That is the 1.45% or the 2.9% with the employer side of the contribution for those who are self-employed. That continues with you no matter how much you make, except this goes back to business strategies, except for those people who pay themselves a reasonable wage through something like an S-Corp, but that's a conversation for another day. Just understand that if you are self-employed, there are ways of getting out of paying that Medicare tax as well when you are over $160,200. All right, let's do a quick recap here. FICA taxes. This is the money that they're taking out of your paycheck to cover Social Security and Medicare benefits in the future for you. It's going to your parents' Social Security and Medicare today, but somebody else's FICA taxes will pay for your Social Security and Medicare in the future. Children, hopefully grandchildren, their FICA taxes will go to pay you. Primary insurance amount is your full benefit at your full retirement age, and it is calculated by taking your top 35 years of earnings. All of those are adjusted for inflation. You need 40 quarters or 10 years to qualify. They take those top 35 years, they average them, and then they apply those bend points that we talked about earlier. Up to the first bend point, you get 90% of it back. Then after that, they give you 32% of your benefit back, and then 15% and eventually zero if your income is high enough. If you are self-employed, it's important that you understand where you fall in those bend points so that you can decide if it makes sense to pay yourself a little bit more and get a lot more bang for your buck in Social Security FICA taxes, or pay yourself less because you're not getting much benefit at all for the last dollars. So how'd we do? Clear as mud? Throw your questions in the comments. Be sure to hit that like and subscribe button and watch for more of our videos on Medicare and Social Security. I will see you in the next video. I am sitting right by a window, and did you notice the sun changed the angle across my entire body as we made this video? Something that you will want to go back and check out.